Joining me now is Steve Auth. He's the Chief Investment Officer of Equities at Federated Hermes. Steve, welcome. And how would you kind of bring this all together for us?
Yeah, it's like Europe, you're just talking about it. It's so bad, it's good, actually, and in international in general, we have a pretty large allocation there as part of this broadening out trade, Kelly. Those markets are trading mid to low double digits in the teens. Emerging markets at 12 times even.
And a lot of people, yeah, go ahead, Steve.
These cyclical type names. Sorry?
No, I was sorry. I thought you were finishing the thought. I was going to say go ahead. And also, U.S. stocks are also at close to all-time highs. So it doesn't sound like it has to be an either or.
No, well, the U.S. market, Kelly, has plenty of stocks that have not really participated, as you know. I mean, talking about it all throughout your show the last several months. I mean, it's all been driven by the Mag 7, and now we're starting to see everything else broaden out. And a lot that has to do with the Trump agenda that is kind of pro what I would call old economy, deregulation, lower taxes, better efficiencies, and then the AI trade starting to broaden out. You were talking about ChatGPT, broadening out, really helping the broader U.S. companies, participate and get earnings growth. And we've got the earnings growth on the U.S. market largely because of all these other elements, going up to something like 350 by 2027. So our idea is if you focus on the long term, stocks look pretty attractive here, even at these valuations. The difficulty is in the near term, there's an awful lot of volatility probably likely this year. You've got a lot of short-term pressures. The sausage making of tax policy, the deregulation is going to come and goes. Fits and starts. We heard something today about maybe the M&A market's not going to take off because, Biden-era policies are going to be continued. I doubt that that's going to be the case. And then, of course, you got tariffs up and down. One of the interesting things about Europe is that they're almost benefiting from the pressure that Trump is bringing on them. And we think China also will benefit because their only reaction is to stimulate domestic growth. That's probably the only card they've got in their respective arsenals. So that'll actually help. In some ways, Trump actually helps them.
I find that ironic, and I'm sure they would too, especially as you've had certain investors out there saying they think Trump is trying to break up Europe and all of this kind of thing. It's clear he wants them to fund more of their own defense. Do you have a view, Steve, on tariffs, whether reciprocal with Europe or elsewhere?
The traditional view is it's not a good thing. We all want fair trade. But I think what the Trump people are trying to get is fair trade. And if that means having reciprocal tariffs, or at least until the point that we actually press people to bring their tariffs down, that to us makes a lot of sense. I mean, if there were no tariffs around the world and all we were doing was raising them, that would probably not be a good thing. But I think in the context of reality, Trump is trying to get a better deal for trade in general. And my guess is the broader global trading environment improves post-Trump. It may take a little bit of sausage making, though, between here and there. And there are going to be moments where, the bond market maybe has a tantrum. We've seen that before, but that's one of the near-term risks that we're a little bit concerned about. Bonds, break out above 5 over a tariff issue, inflation, et cetera, on the short term, that could be a problem.